Welcome everyone to today's DM2 Cardlock Best Practices webinar. Before I introduce our presenter, I would like to first of all introduce myself. I'm Tom Lane, the Vice President of Marketing for DM2. Before we get started, because of the large number of people we have attending today's webinar, we're going to keep everybody's phones muted. If you have any questions during the course of the webinar, you'll notice in the lower right portion of your screen there's a question chat window. You'll be able to type any questions you have in during the course of the presentation, and then towards the end we'll open it up for a question and answer session. I'd like to introduce Emily Naylor, professional service consultant and resident Cardlock expert for DM2. And Emily's going to take you through her presentation. It should last approximately an hour, and that'll leave us up to a half an hour to address any questions that might have. On that note, I'll hand it over to Emily.
Thank you, Tom. Good morning, everyone. We're going to talk about Cardlock best practices today. I'm going to share with you some things that through the course of about 45 Cardlock installs I've seen utilized to their best advantage. We're going to do some little bit of drill down on the Cardlock analysis tool, which is a pre-invoicing analysis. Some of you are already using that. Hopefully I can show you a couple of new things there. And let's just get started. Hope you're all having a great morning. So topics today, I'm going to talk a little bit about integrity and reporting. Specifically what I'm talking about here is you look at your Cardlock reports, the site sales history report, you're looking at your sales journals, you're looking at possibly the pricing only, you're seeing margins that are looking like 20 cents a gallon, and then the financial statements come out and you're not making anywhere near what you thought you were, or you're making way more. You're having problems with trying to reconcile what's going on in the general ledger at the financial statement level against what's going on in Cardlock. And for some of you that's not a problem, and for some of you it is. And some of you may not have CardLink interface with general ledger, but we're going to take a look at that. I'm also going to take a look at pricing, specifically best practices for setups. I'd like to have a little discussion about quantity breaks. Quantity breaks appear in two places, and those two places handle them very differently on pricing by quantity break. So I want to have a little discussion on that. And then want to discuss the pricing regions and product groups features that were introduced probably about 3 years ago. Margin analysis equals margin control. So if you want control of your margins, you have to be able to have some insight into what those margins are. That's handled with the Cardlock analysis tool, so we're going to take a look at that. Multiple networks. Yeah, we handle multiple networks. It's not a huge, long conversation, but we're going to touch on that. We're going to talk about the CardLink transaction alerts, which was released late last summer, and move on to eCardLink. Some of you may be using eCardLink. Some of you are wondering what it could do for you. And then a little bit of discussion on reducing paper and reducing paperwork. So the CardLink versus financials. The key thing here is understanding that the Cardlock margin reports, including the Cardlock analysis, sales history reports, the sales journal margin reporting, are all based on the cost on the transactions versus the price. And now that information is contained in Cardlock. When you update invoices, Cardlock updates the general ledger with information on sales, taxes, and receivables only. No cost of goods sold. Financial reports report margin based on the cost posted from the inventory module, your issues transactions. So GL is only updated with cost of goods sold when inventory is relieved at inventory average cost at the time of the convert and edit. And actually, in more recent versions of the software, at the time you update the inventory, you're going to get the average cost at that time. So there's a little bit of difference between if you're on a late 4.05 version, then you're updating with average cost at the time the convert and edits run. But more recently, we actually update those issues at the time you post the issues. The summary idea from all that is that sales come from Cardlock, cost of goods sold comes from inventory. So Cardlock margin reporting most closely agrees with general ledger gross profit reporting when your users consistently adhere to order of operations and daily work daily. And if you've sat in on any of my presentations at user conferences, or we've had one-on-one conversations, somehow those two subjects both manage to come up. They're kind of my soapbox, and DM2's soapbox as well. Order of operations. First of all, the importance of the order of operations is that if you're not supplying, if you're not replenishing your fuel, you're not updating your average cost. So if you're not getting those bill of ladings processed before you run Cardlock, Cardlock is in, and therefore inventory, when your inventory issues get created, they're not going to be grabbing the average cost that includes those bill of ladings. Now currently, like I said, issues are going to be updated for the time at which the issues are posted. So if bill of ladings got posted shortly after Cardlock was, but before you updated your issues, then you got a little bit of an evening going on there because you're catching up. But it's important that the fuels get updated prior to those Cardlock issues being updated in order for the Cardlock data, for the general ledger data to actually be accurate. So your order of operations, we've got fuels purchased. We get that completed for all of our Cardlock sites through bill of lading. One of my best practices, this is slightly edging towards best practices for bill of lading, is that I batch my bill of ladings separately. I've got all my bill of ladings for customers, and I've got bill of ladings for my Cardlock sites. And as important as it is to get those customer invoices out the door, and so you can get those EFTs and get the payments back in, it's just as important that those Cardlock sites get updated right away so that the Cardlock people can go ahead following order of operations and get their work done. So typically what I recommend is that we break those bill of ladings down, and I've got a batch for my internal inventory, and I've got a batch that's going out to customers. And then I actually process those internal inventory ones first. And you won't usually get much argument from that from your bill of lading people because those are the easy ones. Those are the ones where, you know, it's just going to a warehouse and you don't have near the complications and fine points that you have to watch out for that you do with customer pricing. So update your bill of ladings for your Cardlock sites. Then you want to take a look at your inventory valuation report. Now you've got your most recent average cost. This is why it's important. If I don't update my inventory, I don't have a new average cost. I don't know what to put in my cost table. And this is where we start sliding away. Cardlock starts skewing a little bit away from what's going to get posted to GL. So if my Cardlock sites are updated, I've got my valuation report from inventory, now I can put those costs into my cost tables, and my cost tables have the right actual average cost for that day. Then I go in and my next step is to update my price tables based on whatever your formula is. You may have a table that's based on cost plus. So now that your cost table is updated, you know what to do with those. So you're going to update your price tables. You're going to take care of any customer maintenance, adding new customers, changing addresses, whatever. and that includes pricing maintenance. And you're going to take care of your card management. I want to make sure that all new cards that I have or lockouts or any of that has been entered, and so that when that transaction file comes in, it's not going to have a bunch of rejects because of cards not being set up. I'm going to do my site code maintenance. And again, this is, you may have new foreign sites that you have to set up. You may have new products at a site that you need to set up. You may have tax changes. All those things fall under site maintenance. Then I'm going to run my convert and edit. I've got all the background stuff ready. I'm ready to pull in my transactions. So I'm going to run the conversion, and then I'm going to run the edit portion of the convert and edit, which is going to print out my report of any exceptions that got kicked out. And I'm immediately going to be, if you have credit watching turned on, you're immediately going to get a credit exception report printout. And that's worth taking a look at. Credit exception report is looking at the Cardlock credit limit versus the Cardlock sales that you just processed, which is not 100% accurate because they aren't priced yet, but it's looking at some portion of that as well as what the customer already has on their AR account. So it's looking at unbilled dollars, it's looking at what's in AR, and it's looking at the Cardlock credit limit. The next step, the convert and edit, the edit actually creates the issues. So at this point, we would jump over to inventory and we would take a look at those issues and update those. At this point, I recommend running a rebuild account utility, which is found on the Cardlock setups menu, and we'll talk about that more in a little bit. But what that does is it goes out and compiles all the gallons for these customers that may be included in for group billing or that are getting any kind of price quantity price breaks. So that utility is important if you're using any of those things, or if you're and another thing it does is it recalculates the unbilled dollars. And at that point, I'm ready to run my pricing only. I'm through writing transactions to the system. Now I'm ready to go in and start doing some analysis. Well, that's the order of operations for Cardlock. And the second piece of my mantra is daily work daily. Can't stress that enough. Doing that daily work daily means that all those various aspects are caught up. If I'm not getting my fuel in every day, if I'm not running my valuation report every day, how could I possibly populate my cost table with the accurate cost for each day? The daily valuation report is required to get your daily cost from the system. Local transaction costs get locked in at convert and edit. When you run your transaction file, part of the convert and edit process is to go read that cost table and write that cost into the transaction. For local transactions, that's where it's going to get its cost. And if that cost is not updated and you pick up a cost that's a week old, that's what gets written. And there is no utility. There is nothing in place to go out and change the cost on a transaction once the convert and edit's been run. So again, you'll remember back to order of operations, getting those cost tables populated was very early in the game. So it's real important to get those cost tables updated with the accurate cost. Immediately after that, the issues are created. And the issues, regardless of what software you're on, whether you're in 4.4 where inventory does have a batching feature, or in earlier versions where we only post it in what we consider a batch with a user CLZZZ, all those transactions are grouped together. And whether it's 1 day's Cardlock or 15 days worth of Cardlock, if you're not doing daily processing, and that means that when they get updated, they're all going to get updated at the same cost. So if you're running a transaction file and sending it to inventory and you forget about inventory, or you say, well, we'll just do inventory, whenever, or we run 5 PT files or 5 transaction files, all those transactions are going to have the same cost pulled out of inventory. So again, daily work daily means you can isolate the file, the transactions for that day, and they're going to get the cost done because you're following your order of operations. Balancing gallons is just a heck of a lot easier if you're just looking at a single day. If you're putting in one file and run your convert and edit, you get your edit report, you've got your issues. It's a lot easier to balance those gallons if you're looking at a single day. One thing that helps you out with daily work daily is to make sure that your Cardlock user has a Cardlock checklist with all their tasks in the correct order, and have them initial or check off each day as they complete each task. And you want to have that checklist broken out in 3 areas. You have a daily cycle. So every day you expect that everything on that list is going to be attended to. You've got a billing cycle. And basically, these are all the steps that you are going to take before you pull the trigger on actually posting invoices. And then you have a month-end cycle to make sure that you don't miss anything really important, like printing your tax reports or getting your Cardlock copied over to a backup archive company before you close period end. Daily work daily, one of the challenges that I hear from Cardlock operators is, well, pack, pride, loc bill, over the weekend, I just get a 3-day file. Well, if you don't get deliveries over the weekend, if your average cost in your warehouse doesn't change over the weekend, then you don't have a problem. That's not a big deal. If you do see that you're having major cost changes over a weekend when you've got a 3-day file like that, Pack Pride has always had the ability for you to go in and create a loc bill file by transaction date. If you do that, you do have to be careful that the gallons for that transaction file are going to agree with, if you do 3 different loc bill files, create them by date, you want to make sure that all 3 of those agree with the loc bill file that they provided, because if you had any late transactions come in with a different day than the date you ran, they might end up missing. So you do want to be careful with that. Keep that clean cutoff in mind, though, for month end. If you remember that when you bring in a transaction file and you process it through your convert and edit, it creates issues. So if you're running this loc bill file for Friday, Saturday, Sunday, and the month ended Friday night, you're going to be creating issues for the first 2 days of the next month to pull out of your inventory. You can still reconcile that, but it might be easier for you to pull that month end, to pull that loc bill by date to get that cleaner cutoff for you. Other challenges is your Cardlock operator is out sick, or the internet is down, or there are some kind of network issues. Occasionally, I've known that CFN's web-based network, there'll be issues. I mean, we've all seen a day or two in our lives when the internet was down on the whole East Coast. That stuff happens. So when those things happen, you want to have a backup plan. You want to understand what this whole process is well enough to know how to get to where you need to be. So make sure that if that person's out sick or the network's down and they can't pull in their transaction files, make sure they're still getting that valuation report every day printed after the bill of ladings are processed. That way they still have the information they need to put the data into the cost table so that our cost tables are still being updated. This is an example of that CardLink daily checklist I was talking about. This one started out to be a CFN checklist, so it talks about maintaining account and card changes on the CFN website. Included in here was notification for bill awaiting processor that the inventory had been updated. That notification may be just a copy of the valuation report. Here's your valuation report. You're good to go. Then they update the cost tables, the price tables. They can download the transaction file, run the conversion process. If they have any hand tags, you like to enter those after the conversion and before the edit. That way they go through the edit process. So get your hand tags entered and then run your edit. Once those things are done, looks like somebody forgot to put in here to go to inventory and update the inventory issues. So we'd want to edit that. The joy of putting this in an Excel document is as your processes change or you refine processes, that you can go into this spreadsheet and update it and get those new checkpoints in there. Then we'd run the Cardlock analysis tool to check our margins. The billing cycle checklist looks very much the same. You're not going to have a checklist for every day, but these were actually all part of a single checklist, and it had 31 columns off to the right. So on the days that they do billing, those are the days that they would mark off this billing cycle checklist. Obvious steps: make sure all the transaction files are in, run the Cardlock analysis tool, print your invoices, update the invoices, print the sales journal. My preference here is if I'm printing the Cardlock sales journal, instead of just checking it off, I would actually write down the sales journal number. If it's CL00319, I would put that journal number in there, make it, if I have to go troubleshooting stuff, it would be easy for me to go and find which journal I need to look at. Or if I find in GL I've got something going on with the journal, I can come back to this checklist and say, oh, that was the invoice batch for the 15th. Then you're going to, after you've printed the sales journal, you're going to print the general ledger journal, which this is where the sales get recorded. And if we're using Outbox and we're not sending immediately, then we go to Outbox and do the send there. And then we have a period end checklist. This checklist, you're going to include processes that you have that I don't know anything about. The run Cardlock period end process may be done by the controller, and the Cardlock processor doesn't have anything to do with it, so you may remove that from the list. Making an archive company and copy probably isn't going to happen by then, but they might verify. Maybe you'd change it to read verify that an archive company has been created. So we're just going to, they would just go down the line and check off each thing, and we don't miss anything important like making sure that all the PT files have been processed. So we'll talk now about pricing. And if you'd like, we'll just take a few seconds here to give you an opportunity to type in any questions you might have to this point. I know it's hard sometimes with the webinar to try to get one thing typed in while you're trying to listen to what the next topic is. So I'm just going to take a few seconds here and give you an opportunity to record any questions you might have.
Good idea, Emily. Thank you.
Okay. Pricing. Best practices. Pricing. I don't know of any subject in Cardlock that causes more confusion, requires more retraining, and still manages to befuddle some of us. The key thing to pricing is to understand the components of pricing, because we all know that we have three types of transactions out there. We have local, and then if you're on a network, you have remote transactions, and you may have retail transactions. And each one of those transactions, and we won't even talk about foreign. We won't talk about foreign sales. But each one of those, pricing has a little bit different routine, has a different source of where it's getting its cost or its price, and has different adjustment types available. So it's real important to understand what these components are when you're looking at pricing. So the first thing you start off with is the source of the base price. This is the foundation. This is what you start off with. If you don't do anything else, that's the price your customer's going to get. So the source of base price for local transactions can either be a cost table or a price table. And from this point forward, we'll ignore the cost table and we'll talk about the price table. Just because we have to pick one, and I have a preference. So source of base price for local transactions is typically a price table. The source of your pricing, your base pricing for remotes, is the transfer cost that comes from your network. For Pacific Pride, they actually provide a transfer cost. CFN sends down a single number, but it's the cost. So it's your network cost is the source of your base. I'm sorry. Pac Pride sends down a network price. CFN sends down only a network cost. So that's a key thing to understand as well. So, and then for retail transactions, the source of the base price is the retail price coming down from the network. So local, I'm looking at a table. Remotes, I'm looking at whatever the network sends me. Retail, I'm looking at the retail price that the network sends me. Once we know what the base is, then we look at the adjustment type. Okay? So for local pricing, I can either mark it up by a price level or by a margin. For remotes, I can mark it up by a price level or a margin or what's called an R table, and we'll talk about that here in a little bit. And then the next component, once I decide how I'm going to mark it up, the next component is how much am I going to mark it up. So I've got an adjustment amount. Now in the case of locals and remotes, that amount could be tied to a price level. So if I say price level 2 is a 2-cent markup, I just give the customer price level 2, it's always going to be 2 cents. So adjustment amount is either a dollar amount or a price level. Those are the three components for pricing. Then you have to understand what the default pricing is for each of these three transaction types. For local transactions, my default price, okay, my very bottom base default price could be 0, except that we're not allowed to run a transaction if we don't have a cost table set up for that product. I'm sure you've all seen that, where you set up a new product, you forget to put in a cost table, and that transaction gets rejected because you don't have a cost on it. That's the very bottom line for a default price for a product, is the cost from the cost table. If I don't have anything set up and I've not assigned my customer a price table. Following cost, the next default would be a price table. So I can set up a price table, and if I don't do anything else, the customer is going to get priced off that price table. So that's default pricing. Those are the two fields that are in customer maintenance on the main screen. You've got a checkbox for price table, or I'm sorry, a checkbox for price table. No, fill it in, the table code, and fill in the price level. Neither one of those are required, but once you fill them in, that becomes that customer's default price, and no customer special pricing is required. For remote pricing, the default price is the network price that gets passed down from the network. In the case of Pacific Pride, that is truly a transfer price, which may include any markups that you've set up on the PackPride controller. For CFN, remember they only send down one number, and that's cost. So for CFN, if you do no pricing setups whatsoever, you're going to end up charging your customer your cost, which is probably not a great thing. And then for retail transactions, the default price for retail transactions is that retail price, the street price with no markup. Drilling down a little deeper then, on the local pricing, best practices there, I strongly recommend using price tables for local pricing. You can have multiple tables for different pricing scenarios. You can have tables set up for Opus. You can have a table set up for Opus Reno, one for Opus San Francisco, whatever you need there. Again, this is local pricing. Tables are used only for local pricing. Using a price table minimizes the need for pricing changes at the customer level. If you've got a customer that, or hopefully more than one customer, that their pricing is just going up and down with what you call what the market will bear. Your cost at the rack is dropping, but you don't want your prices to drop quite that quickly. Instead of going in and changing customer margins for from one day to the next, which we all know really doesn't work with this billing cycle, but you can change those price tables on a daily basis. Price tables are date-driven. They give you the most flexibility for pricing. So use pricing tables. Use as many as you need. We talked about the default pricing being on the customer's main screen, and then you don't have to do any special pricing. But if you need your customer priced off one table for diesel and a different type of table altogether for gasoline, you certainly can use your customer special pricing to accomplish that. Don't be afraid of tables. Just remember you need to maintain them. Okay. For local transactions, I really recommend you use a price table. If you're saying you're pricing your customer off of cost plus, I suggest you set up a price table C or whatever code you want to tell, but you know that it's reflecting your cost, and mark up off of that instead of your cost table. First of all, if that fits within your business scheme, it allows you to take advantage of cost trends before they actually affect your inventory costs. Like I was saying, prices are dropping, costs are dropping at the rack. You don't want your prices to drop quite that quickly. Or you do want your pricing to follow the rack. Maybe the rack is going up and you want to follow those racks, but your cost hasn't changed because you haven't actually bought any product yet. So by using a different table that you call your cost, your customers are following that trend, but you're still related. You have a relationship back to that cost table. Another reason for doing that is if for some reason you miss updating your cost table, we know that if you don't update your cost table, we end up with the wrong cost on the inventory item. But that's a bad thing. But we shouldn't compound that problem by also having a bad price. If we understated our cost by 2 cents, that's not a good reason to underdo our pricing. So you catch that we had a bad cost, oops, that cost is already locked onto those transactions, but we can correct the pricing table. We can correct that pricing table right up until the moment you pull the switch on updating the invoices. So if you catch these margins off, go correct your price table, run the pricing only again, and you're going to see that you got that margin back. You can change the cost table, but when you change the cost table, you're still not going to change the cost on the transaction. But what you're going to do is you're going to be breaking your audit trail on those costs. So if you are pricing off the cost table and you have to change the cost, I recommend you do it like 1 minute later than the original cost that you had, so that you can see why it was that, so you can see what you originally had with cost. If you're trying to troubleshoot margins and you want to go back and look at a cost table and see what was our cost that day, that's an important piece to have in place. Okay. So cost table should reflect your actual inventory value, but your C table records the base that you want to use for that pricing. On to remote pricing. For CFN, we came up with what we call an R table to add a blanket margin to remote transactions. Remember I said CFN only sends down one number for remotes, and that is the network cost, what you're going to pay the network for that transaction. And for a long time, either customers had to go out and have custom programming done to add a margin to those CFN transactions, or they had to go into customer pricing and put in customer pricing for each product to have a margin on all those remote transactions. So this is now a standard part of the software, and it's available on all installs, not just CFN customers. The R table has date-time sensitivity, so you can change your margins as often as you need to. And once it's set up, it does apply to all remote transactions. So if you have customer special pricing, you're applying your adjustment in customer pricing to the network cost plus the R table. So I get a network cost of $3. I've got R table set up for 10 cents. That means $3.10. If I want my customer to have a 5-cent margin over my network cost, I would set up a pricing record of minus 5 cents so I could back it down from the R table's 10 cents. If he's going to have a 15-cent margin, I would give him a plus 5 cents, knowing that my R table is going to add 10 cents. The R table does need to be set up, a separate table for each product code. And typically folks set it up because they're looking at it as a blanket margin. They'll set it up for all sites, but it can be site specific. This is what the R table setup looks like. It's found in product code maintenance, and it's under table. It's a price table, just like you would set up a price table for your local site transactions. And at that point, it starts to deviate from a regular pricing table. A normal price table, as you know, you go in and you enter the table code and what site it's for and the date and now the time, and then the price that you want to charge per gallon. With the R table, you enter only the additional margin that you want to be added for the R table. This is the only table in the system that will take that 10 cents and add it to the remote cost. So R is the only code that's available, and R will always act this way. So if you are currently using a table R and you don't have R table functionality and you're going to go through an upgrade, you need to consider changing that table R. So I don't think I've run into anybody that's had to do that yet, but it's out there. Remote pricing, if you're a Pack Pride network marketer, take advantage of controller pricing to add a blanket margin. A lot of folks forget to set up that controller pricing for lubricants, and lubricants are kind of different in Pack Pride in that they come in only with a price and not with a cost. And so we have a hard time pricing them in DM2 because the controller's not sending any price at all. So certainly for lubricants, you need to do that setup. I've worked with jobbers that have been on PackPride for quite a while and did not realize that they had that ability on the controller to do a global markup on their remote transactions. I'm sorry, they're not called remote. They're foreign purchases. So if you're not using that, if you're a PackPride marketer and you're not using that, you may want to consider it, and it is something that the PackPride people can help you with. DM2 staff does not train on PackPride controller features, but several of us have worked for jobbers where we were PackPride users, and so we're familiar with the fact that those features are out there. On to retail pricing. I have to tell you that the majority of my retail pricing experience has been over the last 2 or 3 years with CFN. For retail transaction, CFN certainly is not the only retail transaction. Voyager transactions are all treated as retail. For retail transactions where you're supplied with both cost and price in the transaction file, and CFN does that, some networks allow the price to be lower than the cost. Certainly CFN does that. There are 2 or 3 accounts they have that where the network, the retail price is actually lower than the retail cost. So our recommendation there for marking up retail transactions is to mark up off the retail cost instead of the retail price to ensure that you have a margin on every transaction. If you say we want a 3-cent markup on retail price for all transactions, for most transactions that's going to give you the difference between retail cost and retail price plus your 3 cents. But for the transactions for those big outfits like ARCO, where the network cost is actually higher than the price, you may still not be charging enough to cover your cost. So that's why we recommend using retail cost and as the source of your base price, and then you will have standard margins that way. Your margins will always be the same. Sometimes you'll be charging your customer less than the retail price, but you will always have a margin that way. And a common question that we get is, how can we mark up retail pricing if our customer sees the pump price? And the answer to that, this is all marketing. The answers to that we hear from various marketers is, well, we're giving you payment terms. If you're paying retail price and you're walking in and flashing your debit card, you paid for it today. We're carrying you for 15 days. Fleet reporting, got these wonderful Cardlock invoices that can provide you with all the transactions by driver, by vehicle, by department. And we also have, you may have available web access to invoices, statements, card orders, and transactions. So it's all about the service. So I'm going to give you a minute, another minute here to jot down any questions you may have before I go into talking about quantity breaks. I know we covered a lot and we covered it quickly.
Yeah, we are starting to get a few questions in, so we'll address those at the end during the question and answer session.
Okay. I think my fears of having too much time have run out, Tom. I forgot how much I like to talk. I hear you guys laughing.
When I saw your slide presentation, I figured you'd use the whole time. But as I said, if we do run out of time, we'll make sure we follow up with everybody and answer their questions individually afterwards.
Okay. Okay. I was having a conversation with some fellow DM2 stallers last week, and we got to talking about quantity breaks. And so I thought this would be a good subject to throw out there. Some of you may use quantity breaks, some may not. You may be considering using them, and or you may be kicking yourself for using them. So just a brief discussion on how quantity breaks work, because they appear in two different locations, and they are treated very differently, but based on where you have them set up. So first of all, quantity breaks, we're talking about where you're pricing to your customer buys so many gallons, and he gets a slight discount to his price, or he buys another couple of 100 gallons and he gets a different price, and he buys a couple thousand more gallons than that and he gets a better reduction in his price. So that's what quantity breaks are for those of you that aren't using them, aren't familiar with them. First of all quantity breaks are calculated over the billing period. If you bill once a week, they're calculated over that week period. If you have one customer you bill weekly, that's what his quantity breaks are calculated on. If you have another customer that you bill twice monthly, that's the period his quantity breaks are calculated on. It's only looking at transactions that are being billed at the time they're being billed. Okay. They're available, quantity breaks are available in price level pricing scenarios. So your price levels actually have places to set up quantity breaks. And these are primarily used for local transactions. Sometimes remote, because when you're doing remote pricing, you can your remote pricing, your method of adjustment can be price level. Probably not the most used, but it is an option there. And for foreign purchases if you're pack price. Terms code maintenance allows for customer discounts as well, and they're applied only if the invoice is paid by, and I said the due date, but it's actually if it's paid by the discount date. There's a discount date set up there. Okay, price level pricing quantity breaks are set up by product. So each product can have its own levels of own quantities of where these breaks are. Gas might be in 500-gallon increments and diesel in 1,500-gallon increments, whatever you want it to be. The markdown, the pricing that you do, is determined by the gallons purchased, and you can determine the gallons by product or by all products. And what that means is there's a setting in Cardlock options that if you check the flag, it means that if I have a discount on every 500 gallons for gasoline, and I buy 600 gallons of gasoline and 900 gallons of diesel, it will look at the gallons of gas and the gallons of diesel together and then apply the discount to the gasoline based on how many gallons I bought altogether. Or I can set it up and say, no, he only gets this discount if he buys that many gallons of gasoline. So it's either, and it's a system setting, so it applies to all customers, it applies across all products if you set that setting. But that's important to understand, that you can either say I'm applying it based on how many gallons of gasoline you're buying, or it's a discount on gasoline based on all the gallons that you're buying. Okay, so that's important to understand the difference there. It is, the price level pricing is applied to the customer price. Okay, so it's coming in at the pricing level. It's not something we tack on at the end or take off at the end. It's right there embedded into the price. When you look at a customer price on an invoice, you can't tell whether he's got a price level or not. It's just part of the price. Because it's part of that, so it's not displayed on the invoice anywhere that says you have this discount. You get this when you buy 500 gallons of gasoline. It's just built in. Key thing here is that pricing, because it's in the pricing, that discount is rolled into your sales and your gross margin reporting. Our sales on gasoline, this guy got a $20 reduction in overall pricing because of his gasoline sales, his gasoline sales are going to be $20 less. Your gross margin is going to be $20 less because it's all part of the sales. And these quantity breaks are not dependent on when he pays his bill. It's strictly based on gallons, and that's it. Okay. Price level quantity breaks, this is an example. I've got a break at 1,000 gallons. I don't give him any discount at all. From 1,000 to 4,999, he gets a half a cent off. From 5,000 to 74.99, he gets 3/4 of a cent off. And you really want to watch your setups because from 7,500 to 9,999, I'm going to charge him an extra penny because I forgot the minus sign. So when you're using quantity breaks, when you're doing this to discount the products, be sure you're watching those symbols to make sure that you're doing what you want to be doing. Price level assumes that whatever number you're putting in here is a markup. So if you want to treat it as a quantity discount, a price discount, then what you want to do is put in it, make sure you have a negative number in here. It's a real important thing there. Okay. Who knows what that was? Terms code quantity breaks. Okay, these are set up by the terms code. You know what terms code are, 10 days, 10th of the month, 15 days. So it's set up in terms code as a discount. And it displays on the invoice, if paid by this date, and it displays the discount due date. And then it tells them how much they can deduct and how much they can pay. It's only applied when the invoice is paid by the discount due date. Now, Cardlock doesn't have a clue when this invoice is paid. So what this tells us is that this is actually becoming a function of AR cash receipts. That discount doesn't have anything really to do with Cardlock. It's got to do with accounts receivable. So it applies to all products and all transaction types, because all it knows is I have an invoice, and if I pay it on time, I can take this much discount. It doesn't know what was my product and what was pack prides or CFNs. It doesn't know whether it's gas or diesel or whatever. All it knows is this is the discount amount, and we're going to base it on gallons at the time we calculate the discount. But once that invoice is updated, the calculations are done, and we're just storing the fact that we have a discount. This terms code discount is not reflected in gross profit reporting to sales. Not hard to figure out why. Sales are posted at the time I update the invoices, and I don't know whether this discount is going to be real until the invoice is paid. So gross profit reports assume that the customer is going to pay the full price out of Cardlock with no discount. Sales, my gasoline sales are my gasoline sales because my discount doesn't care what's gas and what's diesel. So this is a key thing to understand. This discount is booked to the general ledger as a single GL account. And it's what you have set up in your AR division maintenance for discounts. So comparing the two, when I'm pricing with price level, any discounts, I put that in quotation marks, any discounts for quantities that you give are reflected in that product's sales. Diesel sales, gas sales, sales went down because we gave them quantity breaks. But in terms code quantity breaks, we gave them a discount, and it had no effect whatsoever on gas sales or diesel sales. but it did have an effect on discounts, which cannot be broken down over what got discounted, gas or diesel. Okay. Terms code quantity breaks can either be a per gallon or a percentage on gross amount. And it looks like this. So there's my terms code. I put in a description that helps me to understand which one it is. I've got the same setups here from quantity to quantity. The difference is this pricing here, this discount here is going to apply not only to my local sales that the price level did, it's going to apply to all remote sales as well, and retail if I've got them. All in terms code, your discounts are always entered. These are discounts. We know they're discounts, so they're entered as positive numbers. And your day's discount allowed, this is going to drive what day we stop applying the discount in cash receipts. So if you're giving them 30-day terms, but you're saying discounts in 10 days, and they pay in 12, AR is not automatically going to try to apply that discount in cash receipts. Okay, so quantity breaks, important things here. Be sure if you're offering quantity breaks, be sure that your sales team understands the difference so that they're not promising discounts on the customer invoice and you want to give quantity breaks only on your own products and your own site. It's important to understand how both these work before you try to market them. Use terms code discounts to encourage slow pays, but you may want to use our tables or customer special pricing to increase your remote pricing before you discount. In other words, rob from Peter before you try to pay Paul. If you decide to use a combination of quantity breaks, like some price level and some terms code, make sure you understand how they work together. You don't want to end up discounting so far down that that you're actually not making any money. Okay. Regarding quantity breaks, after you're convert and edit every day, if you're using either form of quantity breaks, you want to run the rebuild account group unbilled amount from the Cardlock setups menu. It's a utility. It's been out there as long as I can remember. As far back as I can remember, that utility's been out there. What it does is it goes through, and well, in the next screen, it's going to tell you what it does. It'll give you more accuracy for pricing only and for invoice printing. And the side benefit is it'll give you more accuracy for the card-linked credit exception report because it's actually going out and recalculating those quantity breaks to come up with more accurate pricing. This is what the utility actually does. It's going to read all the unbilled transactions and recalculate the total purchase quantity for each account and group. And this is where we start looking at quantity breaks. It's looking at the quantities. And then they're going to be available for invoicing to determine the discounts. So it'll also rebuild your unbilled dollar amount in CL1. I can't underplay this utility if you're doing any kind of quantity breaks. It's really important. And it's probably one of the most overlooked utilities on the setups menu. So if you're doing that, you're doing quantity breaks, and you go back to your office today, make sure that this is part of your daily routine. And if it's not, at the very least, make sure that it is on that billing cycle routine, that you've incorporated that into your process. Pricing region groups. Pricing regions have been available since about, I think, version 405.6. What they do is they reduce your setups for pricing, for customer special pricing, by grouping sites that will be priced with the same scheme. You can either use the DM2 site code, which is referred to in the screens as local site, or you can use the network site codes, which we call foreign site. These pricing region groups are used only in customer pricing screen. We don't set up tables for them. We don't set up, it certainly doesn't have anything to do with taxes. It's strictly for customer special pricing. Like I said, they're not to be confused with region codes. They don't have anything to do with the region codes that are telling us what state they're in, although you can make them mean anything you want. For remote transactions, this replaces the site option in customer pricing. To set up pricing region maintenance, it's on the Cardlock setups menu. You go to pricing region maintenance. You put in a code for your pricing region. It is an alpha. Pricing regions, like I said, for remote pricing, they replace sites. For local and retail, you can use either site code maintenance or pricing region. The way the system knows the difference, whether you're talking about a site or a region, is the fact that sites are always numbered and regions are always alpha. So you're going to set up an alpha code. You can enter under local sites. You can select that you want to use whatever DM2 site. Under foreign, you can put in any specific network sites. And if you're combining local, remote, or retail in one pricing region, remember that a pricing record has to be set up for each record type. When we go set up customer special pricing, the first screen, it defaults to local. We pull down the little arrow. We can go to remote or we can go to retail. So if I'm, in this case here, in this particular situation, I have set up a site, a pricing region I called Nevada, and I called it Nevada area. So I included Site 125, which is the whole state of Nevada, and then I included 3 sites that are in Bishop, California, which are so close to the border that I want to price them as though they were Nevada. If this customer goes to Nevada or to Bishop, California, he's going to get the same markup. Now these happen to be remote pricing, so I'm not going to use a table, but they'll use, for that customer pricing, I'll use the same markup or perhaps same price level. Product groups. Product groups were designed to reduce setups and make more efficient by grouping products that are going to be priced with the same scheme. If all clear diesel products can be priced with the same scheme, create a group for them. And again, this is used on the customer special pricing screen as well. It is not used in tax exemption entry. Okay? Pricing only, customer special pricing only. So product group maintenance looks like this. Again, products have a numbered code. Product groups have an alpha code. So I just simply set up a code, give it a name, and then I assign all the products in my product listing that I want to be in that code. Pretty simple setup. Then I want to set up pricing. So I've gone into this customer, and I've said for, this would be remote, says foreign. For this particular customer, when he does remote purchases, if he's in that region, Nevada, NEV, then, and he buys any product that is in the CD product group, then the source of base price is going to be my network cost, and I'm going to charge a margin of 15 cents. Again, used only in customer special pricing. I enter the pricing region, I enter the product or the product group. The magnifying glass shows you actual products. The binocular shows you groups. And you'll note that in remote pricing, under pricing region, I don't have a binocular. I can't look up individual sites. For remote pricing, pricing regions are the only way I can select an area. I can either do all sites or I have to enter a pricing region. Now that piece is new. Now that you have it set up, how do you know if it's right? Well, let's see. We could print out 200 invoices and pour over them looking for problems. Maybe we'll find them. Maybe we won't. I bet we call in sick the next day. Or we could just mail them out, see if any customers call us back. We could get the IT guy to do an export and a bunch of calculations and see what falls out. And chances are he might have a chance to get that done by next Friday. Or we can run the pricing only option in Cardlink on the main menu. Pricing only option is available in versions 4.05.6 and above, which means you probably already have it. You may not use it. You may not know you have it. But if you've been upgraded to version 4.30, you have it. So what does it do? Well, it prices transactions as though they were invoiced. And once it's run, the current period transaction report has prices and taxes populated on the unbilled transactions, which I'm sure y'all have in the past have figured out that if you want to run the current period transaction report, you had to go preview invoices and run through the whole invoice run, and then you could run your current period transaction report to see taxes and prices on it. But pricing only does all that in a fraction of the time. I don't know where I stole that slide. Okay, pre-invoice margin analysis. It's used to I know where I stole this one. Proactively shape your margins prior to generating your Cardlock invoices. It's all about insight into what's going to happen. What do these margins look like? Oh no, that's wrong. Let's fix it. So you can quickly identify problems that you may have with pricing records on your customers or setups on your products like the cost or the price tables weren't updated. You can reduce the time it takes to get your invoices out the door by auditing that pricing throughout the billing cycle. You don't have to wait till the day you bill to run pricing only. You can do it every day. I recommend you do it every day. And it's worth using in any Cardlock install, whether you're network or standalone. And let me say this again. If you are on version 4.05.6 or higher, you already have it. Okay. Cardlock analysis pre-invoicing tool, analyzing pricing and margins. It reports on uninvoiced transactions. So if you're wanting to use it to go back and look at what the last billing run looked like, too bad, too late. It's proactive. It's not reactive. It reviews pricing and gross margin before you update your invoices. It lets you evaluate your budgeted margins to actual and adjust if necessary before invoicing. In addition to the fact that you want to make sure every customer has a good margin, you may have a requirement that we're budgeted to have $50,000 gross profit on this Cardlock run, and we're $5,000 short. We have a margin on every customer, but we got to make that $50,000. You can use it for that. And the competitive analysis are your local sites over or underpriced compared to nearby competitive sites? So you can even tell that. It's easy to set up. It's a flag to turn on in the Cardlock setup options. There is a spreadsheet, which even if it's not where it needs to be, it's on your system. and it needs to go into the MAS 90 analysis directory. It's run from the main menu, pricing only option, and it goes through the pricing routine, uses current setups, whatever you've got right now. And if you don't like what you've got right now and you go out and you change the price tables or you change that customer's margin and you run it again, it uses those current setups. So it opens Excel, it creates 4 pivot tables plus 2 worksheets containing the underlying data. It does isolate foreign sales from the analysis because foreign pricing has no setups. There's not very much we can do about what Pack Pride or CFN says they're going to pay you for those transactions. So they're in the spreadsheet, but they're in a separate spreadsheet. We don't use them as part of the analysis. But we get them out of the main analysis so that you can see what your controllable margins are. The pivot tables, you've got a gross margin category tab. It's the most used. It's the one that gets you right to where you need to know right now. How many transactions have 0 and below gross margin? How many have too high a gross margin? Believe it or not, that can be as big a problem as too low. And what other kind of anomalies are out there? Clicking on a cell in the pivot table opens a new spreadsheet with the transaction detail behind that analysis. This is what the gross margin by category by site looks like. It actually lists, you've got the margin category, this one's less than 0, and then it shows, you how many transactions for each product. So column B is number 2 low sulfur diesel. We have 56 transactions less than 0 margin. So we have an issue there. If I want to see what those 56 transactions are, I just double click in that cell that says 56, and those 56 will show up. There's another pivot table by site, shows the average gross margin and average price tabs. There's a customer tab that displays each customer, showing total gallons, total gross margin, and unit gross margin for each product. Is there anything wrong in this tool? Anything in this spreadsheet that looks bad, drill down on it, figure out what's wrong, fix it, and run it again. There are 2 tabs in here that are the underlying data. One's called CL Data, and that's all your local and remote and retail transactions. All your foreign transactions are in another tab called Remote. Again, this is just some pictures of that's the gross margin unit by site, the price per gallon by site, and the gross margin dollars by site. There's a reality check. The pre-invoicing tool, I have to tell you, I think it is the hottest thing to hit Cardlock in 15 years. I've heard customers tell me that's going to pay for my next upgrade. It's that big. The reality check is it doesn't do everything. It does not display taxes for your auditing. So if you have the wrong tax rates out there or you're missing tax setups, it doesn't find those. And a good margin can still have a bad price if it also has a bad cost. So your margins might look good, but if your costs and your prices are equally bad, then you could still show a margin. So I'm not saying that you need to look at anything else, but it is going to prevent you sending stuff out with poor margins. In order to how do you deal with those limitations? Well, the first is always preview invoices when you've got new customers, new sites, or new products. Preview those invoices prior to updating. Go in and really take a look at them. We don't get new DM2 sites very often. We don't get new product codes very often. So when they come along, go ahead, print a couple invoices that have them on them and take a look at them and make sure that everything's copacetic, as well as the Cardlock pre-invoicing tool. And this goes for customers, products, or sites that have had setup changes during the billing cycle as well. Okay, at this point, I would like to show you the analysis tool. So this is what I was saying. This is the GM categories. I've got a margin category here of 0 to 2 cents. I don't have anything here less than 0, so nothing's showing up. There really aren't any good ones here under 2 cents. There's only one. So I'm going to go down here to this 29 to 31 cent margin. And I can either click on this and see the one product carb DF that's out there, or I can go over here to the grand total, and this will show me every transaction I have out there that's over that 31 cents. So all it does is opens up a new sheet with that detail. I can delete that sheet, and if I wanted to drill down on another area, like I did say, okay, I want to know what's less than 2 cent margin. I've only got, looks like that one product now. There's about 3 products there. Again, I'm going to the grand total. I could click on this if I just want to see the premium. And those are the 5. They're all for one customer. So maybe I got something funky going on with that customer, or maybe he's my brother. Actually, in this situation, I think he's the owner of the company. So there's a good reason for that one. He actually is. Okay, so that's the gross margin category by site. I'm not so interested myself. Maybe, I'm sure some of you have a reason, but from my standpoint, we're trying to make sure pricing is right and move on. At your level of analysis, you're very likely interested in the average gross margin of every single site that happened to be in this visited during this billing cycle. I think it's a lot to look at, but I did find that I could go to this under site name and go to value filters and go to the top 10. And again, this is average gross margin. This is cents per gallon. And I want to see the top 10 sites for gross margin by site. That means these guys, these 10 sites, I got the best margins. That's important for me to know. Where did my customer go? Why did, and I got excellent margins there. What was it about them? If I needed to know more about it, like who was the customer, again, I could click in there, and there's the customers that went there. I had more than one. So maybe it's not about the customer. Maybe there's something about that site. By the same token, I could go back into value filters, go to top 10, and I want to see the bottom 10. These are the 10 sites. These are where I got the worst margins. And the lowest one I see is 7 cents, so I'm not exactly going to go crying to the bank. But I do have margins, but they're not so hot. So I might want to go and I'll look at that and see who that is. So this is how you can use the analysis tool besides just what's going on, and then I can clear those values, besides just what's going on with margins. You also want to know where are our customers going. I can go into my customer screen, and in my customer screen, go to the value filter, take the top 10, and look at the top 10 by quantity or by gross margin dollars. These could be very different customers. My top 10 customers by quantity, there they are. Total gross margin, $3,000. But I want to go back and look at my top 10 by gross margin dollars. I'm at 15,000. So obviously, well, I should have looked over here. That's the totals. So using these filters, actually, it's more than just making sure your margins are right. It's also a great analysis tool to find out where your customers are going and when they go there, whether you're making money or not. Okay, so that's the Cardlock and pre-invoicing tool. And the reality check, it's just important for you to know it doesn't do everything, but it's real close. Multiple networks. Yeah, we can. DM2 handles multiple networks, have been doing so for many years. I think I did my first multiple network back in 1999. It does require custom programming. The reason multiple networks are a problem is because every network has its own list of product codes, and even though they're the same products, they use different codes. Product 43 in one code is product 24 in another. And of course, Mass 90 only has one product code file. So that's why we've not been able, we've been able to handle multiple networks. For many years, the solution was that you set up Cardlock in two companies. So you had your main company that had one of your networks in it, and then you'd have a secondary company with a second network in it. And then we build a bridge, and I'll get into that in a little bit more. The other option, which has come up more recently, is to use a product cross-reference, so that when you run say you're set up with Pack Pride as your main company, and when you run a CFNPT file and product 53 comes in, and it gets converted over to the Pack Pride product code 01. And so from the point at which that data gets into Mass 90, it no longer uses product code 53. All it knows now is product 1. That's what gets written to the transaction. That also requires custom programming. But those are the two methods we have. One uses separate companies and then merges them together with a bridge. And the other one, we use one company and just swap out the product code during the convert program. Two networks, one bridge. We use two companies. In the second company, you maintain your AR and your general ledger only for maintenance. You don't do any cash receipts there. You maintain Cardlock as usual. And when you run your edit every day, it builds inventory issues over in the main company. And when you update invoices, it sends the invoices over to the main company, to the AR and general ledger. And in Cardlock history, setups and master files for the second network is all in the second company. So anything Cardlock is still back in its own company, but anything AR, GL, or inventory gets sent over this bridge to the main company. So you wouldn't even know that they weren't there. It does require, now, two networks. One company requires programming to provide you a product code cross-reference, and then you need to set up the cross-reference. And then the product codes are switched during the convert. And by the way, Voyager has a built-in cross-reference in the current software. So I believe it's 4.3.4 and higher. The Voyager cross-reference is already built into Mass 90, so it doesn't require custom. Other multi-network considerations, card maintenance interfaces. Pack Pride pulls data out of Mass 90. CFN pushes data into Mass 90. So they're very different there. And basically, with card, first of all, those are the only two card maintenance interfaces we have. And CFN does not have a conflict because it's pushing data into Mass 90, but there certainly could be a conflict with Pack Pride, because when you create a card, it wants to write it out to the file that goes to Pack Pride, and it wouldn't know whether it's Pack Pride or CFN. So if you're doing card maintenance, it's something to consider that before you decide whether you're going to have a two-company solution or a one-company solution. Financial reporting, do you need separate sites for each network? That's doable. You can do it. Obviously, separate sites means separate GL accounts. So if you're wanting to track CFN sales versus Pack Pride sales, then you would want different site codes. Foreign site codes, Fortunately, with Pack Pride and CFN, there's no conflicts. And with Voyager, there's a whole different process for Voyager, so Voyager doesn't create a conflict either. And so you can't have duplicates, but so far we haven't run into that as an issue. Pricing setups, the same setups affect all transactions. If I set up the R table for CFN to add 10 cents to every transaction, I'm going to add it to every Pack Pride transaction as well for remote transactions. So when you set up your pricing, you have to take into account, just as though they were CFN, oh, I've already got 10 cents being added, so now I have to go back and add or subtract whatever it takes to get to what I wanted to have for the Pack Pride margin. So you just have to keep into consideration that all the programming is working. CFN cards are maintained on their website, downloaded to mass, doesn't matter what other networks you have to work with. And then we already talked about Pack Pride. Card management with Pack Pride, we did the optical cards for years. They're all gone now. We're doing card management with the mag cards, the blue cards, and they're recorded mass 90 and uploaded to the controller. Pack Pride does not allow integration for extended network supercards at this time. When you want those cards, you have to go to the internet and build them, and there's no interface because Pack Pride doesn't allow it yet. So that's that. Voyager and other networks, there's no card management integration. There's a blank screen. Okay. I'm going to give you just another half a minute here to type in, jog in any questions you may have, because I know I've been going really fast because I was afraid I was going to have a lot of dead air today, and it doesn't look like that's happening.
Yeah, we've got a number of questions, and so we'll try and get to all those before we're finished.
And we're due to finish in like 2 minutes.
No, we've got about 5 minutes left, Emily.
Okay. Do you think we should stop now to take questions then?
All right. Why don't we go ahead and address a few questions here. I'll answer the first one. Mike has asked if this presentation will be available afterwards, and I forgot to mention in the introduction that we are recording this session. We will be posting this on the customer content page of our website, and we'll send everybody a link to that. We'll also include all the presentation slides that Emily's been going through today. The next question came in from Tony. She is asking, what is the Cardlock analysis tool? Is that the pricing only option?
Yes.
Okay, and I think you covered that in detail a few slides ago. Next question is from Tony also. She's asking on the rebuild account group unbilled amount feature, should it be run even if they aren't doing the quantity discounts?
If you're using the credit exception report, yes.
Okay.
And it won't hurt to run it no matter what. It won't hurt a thing.
Okay, the next question is from Sean. He's asking, with 4.4, can he process a loc bill and PT file at the same time with the same conversion and edit, with the same unified update?
Assuming that he has the custom programming to for the product cross-reference. I don't know whether he has any custom programming or not. It's not standard to be able to process.
He's saying that he does have the custom programming.
Then yes, you could. I don't know that I would recommend it. When I run both files together, I end up with one edit report, and if my gallons don't match, I'm not going to know whether they were Pack Pride problem or a CFN problem. And that's just, I like to take small bites, but it would work. It would be functional. it would be functional.
Okay. All right. The next question is from Jessica. How do we set up Credit Watch to get the credit exception report?
It's a flag in Cardlock. It's a flag in the Cardlock setup. And I will show you. Credit Watch right here. And right below it is activate the gross profit analysis tool.
Okay.
So main screen.
All right. The last question we have at the moment is from Maria. She's asking if she corrects the cost table after doing the conversion edit step, is the revised cost used when running invoices? And in this particular case, it's for a customer on cost plus margin pricing.
Okay. The cost, because you change the cost, the price will change, but the cost will not. So if you're doing cost plus, again, I recommend you use a price table instead. But if you're using a cost table and you change the cost table, the pricing will change accordingly. But the cost will not. So you still probably won't see the margin you're looking for.
Okay. All right. Those are one more question from Mills. He's asking, what is a hand tag?
A hand tag is a transaction that did not make it through the network for whatever reason. A common one would be somebody, some transaction that might have gone through the network didn't. Maybe you had a tank wagon go out and deliver 20 gallons to a customer that's a Cardlock customer. I don't know. And, you know, he's broke down. I can't even think why, but you make some delivery to somebody who doesn't have who has a card and an account, and that's all they've got, and you want to bill it through Cardlock. Another one would be if someone went in and used your local card. They came in and did a cash sale, and they didn't have their card with them. So they charged it on your local, your company card, and then you went in after the fact and you wanted to switch it over to his card, but I don't know. But basically, a hand tag is a transaction that did not go through the network. Did not go through the network.
All right. I think that addresses that question. Those are all the questions we have for right now.
Okay. We still had transaction alerts, and e-card link to look at. So, what do you want to do, Tom?
Well, we are already past the time that we had set for the webcast. So I think to respect everybody's time, what we could do is we could reschedule another webinar to continue that.
Okay.
So I think that's the best thing to do because it looks like you probably have probably another half hour worth of material. Mm-hmm. So apologize for the timing on that, but I think you covered all the main points in CardLink. And if you could just go to that last couple of slides real quick.
And you want to take over presenting? Or, oh,
sure,
you can,
sure. No, I can just go from your slides. So
okay.
If you want to put that in full screen mode.
Okay.
All right, just a couple of brief announcements before we end today's webinar. Please go to the next slide. For those of you who are Pacific Pride marketers We made an announcement earlier this week. It looked something like this. We sent this out in email format to everybody. We wanted to make you aware that we've completed the development required to support Pacific Pride's new T6 local.csv file format and the next product code set that they're going to be introducing. We're currently working with Pride to do some field testing. It looks like the field testing is going to take place next month. And because your Pac Pride controller needs to be upgraded at the same time as your Cardlink system, Pacific Pride has asked everyone to contact Donna Allison over at Pacific Pride to work with us on the scheduling of those, because I believe they have to be on site when they do your Cardlink, or excuse me, your Pacific Pride controller upgrade. So we're going to work with them to coordinate schedules and make sure that we're able to upgrade your Cardlink system at the same time they upgrade your Pacific Pride controller. So if you haven't done so already, we urge you to contact Donna so she can get you on the schedule. And if you're current on your software subscription plan, there is no cost for the actual software to upgrade your Cardlink site. There will be a flat fee incurred for the professional services time, and if there is any custom programming in your Cardlink system, there will be an additional flat fee charged to bring your custom forward with the new format. Okay, if you go to the next slide, Emily, one other quick announcement. We want to invite everybody back next month on January 12th at 1:30 Central Time for our credit card processing powered by Sage Payment Solutions webinar. We're going to have a couple of representatives from Sage Payment Solutions to walk you through the credit card processing that they offer, to talk about the advantages, how you can increase your operational efficiency by bringing that into your system, how you can expand your sales opportunities, and most importantly, reduce your PCI compliance costs there. So I want to encourage everybody to attend that webinar. We will be sending out an invitation shortly for that. And as I said, we are recording today's session, and we'll post the recording as well as the presentation slides on the customer content of our web page. We'll send you an email as soon as those are available so you can link to that. And that's really all we have for today. So I want to thank everybody for your time and attendance. And we'll look forward to having you join us next month for next month's webinar. Thank you very much, Emily. You did a great job, very thorough. And as I said, we'll go ahead and reschedule one to address Cardlink alerts and the e-Cardlink portion of this.
Thank you.
All right. Thank you, everyone. Thanks, Emily.
Thanks, everybody. Bye.
Bye.